General Motors pulling its 2025 earnings guidance and pausing share buybacks amid tariff uncertainty. This, as White House Press Secretary Caroline Leavitt confirms President Trump will sign an executive order on auto tariffs today, expected to soften the impact of levies on the sector. Joining me now, Itay Michaeli, TD Cowen's equity analyst. Always great to speak with you, Itay. What does all of this mean for GM? Scrapping guidance, freezing buybacks, a net income slide. Where does it leave you on the stock?
Sure, yeah. Thank you for having me. So really no surprises, a solid quarter from GM, a modest beat, pretty much all around. I think it does make sense given the near-term uncertainty to pause the open market share repurchases. We've seen other companies do that in the space as well. And given to your point, just kind of yesterday's developments with tariffs, I think the company wanted a couple more days to digest the news before they come back to the market and update the 2025 guidance. So it makes a lot of sense to us, but overall the quarter was solid, and now we're eagerly awaiting Thursday's update.
And talk me through the pull forward dynamic and whether or not you're seeing that in GM's earnings here, because obviously net income sliding in the first quarter. To what extent does that indicate to you that consumers weren't interested in pre-purchasing from GM before the tariffs were put into effect?
Yeah, we did see some signs of a pre-buy in the U.S. for new vehicles in the month of March, although some of that did come out of GM's inventory, so inventory ended up lower than expected. We do still see some pent-up demand, though, in the U.S. We do think underlying auto demand is relatively strong. We think consumers, from our survey work at TD Cowen, consumers do want to increase their cars per household in the next couple of years per our survey back in February. So underlying auto demand trends were strong throughout Q1, but you're right, we did see some pre-buy in March. We could see maybe some of that into the second quarter. But overall, if you look at GM's market share performance in Q1, their pricing performance in Q1, the success of their new products, the company does continue to execute well and perform very well overall.
Itay, on the international spectrum here, we saw good strength in China and elsewhere, other countries as well too. Do you see that continuing? I saw that EBIT for international was up close to 150% in China. Over it was negative in China. It's a positive 45 million EBIT for the China income. Do you see that continuing, or is that part of that pull forward you were talking about?
Yeah, the international probably didn't see a pull forward. GM International did come in a little bit below our forecast in Q1, but you're right, they have been making some progress in China. It's been very challenging for GM in China. They've done a number of restructuring actions there. So we do see prospects for improvement there over the next couple of years in the international business. But most of the pull forward really was concentrated in the U.S. starting in the month of March.
And I want to broaden the conversation out a bit, Itay, because you cover so many of the automakers. President Trump is expected to soften auto tariffs at a rally tonight. I'm curious, which of the automakers that you cover do you anticipate rallying the most when we wake up to the opening bell tomorrow morning off the back of those announcements of softened tariffs for automakers?
Absolutely. We're still waiting a lot more detail and definitely some open questions and clarifications. But if you kind of look at just the relief on the parts tariff themselves, that would benefit companies that have a fair amount of U.S. footprint. And Ford certainly has more U.S. vehicle manufacturing footprint than GM. Tesla, of course, produces all their vehicles in the U.S. in terms of the North America footprint. So those companies would stand to benefit more just because they're more exposed to parts tariffs. So any relief, and again, waiting for more detail, but any relief on parts tariffs would accrue, kind of all else being equal, to companies that are more exposed to them in the context of the overall tariff situation. GM, of course, would be exposed as well, but still a significant footprint in both Mexico and Canada. And so we'll have to kind of see whether there's any future relief on those as well. But for now, from what we've read, the immediate relief seems to be focused on the parts predominantly, as well as some of the stacking tariffs that have been in question as well.